it was a little bit exciting. 2, right now I'm building a multi-million-dollar company. And I want to start from there. And that's why I chose not to even do a presentation, because what I'm about to say is practical. What we are going through and everything that you might want to take from me is going to be based on these reasons. Right now, the last 18 months, no, actually, yeah, let's call it 18 months, actually. I'm building 4 companies. One of the biggest companies, one of them is right now we are aiming for $1 million by end of next year in total assets. In 10 years, we are trying to build close to a $50 to $100 million kind of portfolio. And we are just 30 people. Very ambitious. By the time I brought it up into the public and I told people I'm looking for partners, I had spent 4 years building it internally. Knowing what I must do, knowing what I shouldn't do, knowing what I must say, and how I should resolve the leadership crisis that many times such groups face. Right? Why am I starting from there? One of that, it ended up birthing 3 or 4 other companies. I'm going to call them companies, which on their own, we are hopeful we can build them to $1 billion plus each company in the next 5 to 10 years. And we are going to do it. So when I was told, okay, the team is trying to build this, I realized it's not about investments. It's not about me telling you which products are you going to do. It's about talking so much of my experience on what things you must completely avoid if Bumu Fest will be there in 5 years. If somehow in 5 years we're going to celebrate, we will be there to celebrate. The first one, I don't know how many people you are. I don't know. Abraham is the person I know, and Julius, but I'm seeing Isaac, I'm seeing Jensen. How many people are you in total who have bought in? Yeah. Yeah. 10 members paid up. Now, thank you so much. Now, let me address the 10 and the other 15 differently. If you are doubtful of where the vision is and what the vision bearer is trying to do, move out now. If you are somehow not so sure that this will work out, let other people go. Say, guys, I don't feel like what you guys are about to do is something that resonates with my goals. Do not be the weak link. That's for the first 10 people, right? The other 15 people who are logged in and potentially would want to sign into this and join in. If somehow, somewhere you do not belong to a collective and you have always wanted to belong to a collective, you have a chance. But please, come in knowing one important thing. Decision making is the most important thing, and not all of you can make decisions. What kills investment clubs majority of the times is an assumption that Kakande and Alex and Peter and whatsoever, all of us have to weigh in on each and every decision. Whatever the leadership is, if it's the vision bearer, have the ability to trust them to say, if they had the wisdom to think long term and say, let's do this as a collective, let's trust them that in the next 5 to 10 years, they might make us move past whatever storm we're going to face. You can challenge them, you can ask all the questions, but allow them to drive this ship forward. I can talk treasure, I can talk products, I can talk investments in the US stock markets, and I know there are a few questions there, which I believe that's the greatest wealth making machine. But that will not so much solve your issues if out of 10, 2 people are always talking behind the back of the other 8, always finding the mistakes of what the leadership is doing. If you are not willing to rally behind the leadership, always exit early because you become the weak link. That's 1. 2, Simon has talked about something that is extremely important. That's why I said it is going to become hard for me to talk after what Simon has said, because he's an anchor of wisdom. He said, dream big as a club, as a group, as partners. But it's not just enough to dream big. If I'm to ask a general question on averagely, Who is the wealthiest among you? You don't need to give me that answer, but let me just use an assessment. Let me assume the wealthiest among you is worth $1 million. You have 5 years, between now and 5 years, to make sure the club is wealthier and bigger and more important than any one of you if it's to survive. These I'm talking from experiences that I've gone through building companies, bringing people together. In my ecosystem that I barely talk about behind the scenes, I have close to 80, actually 30 people and 80, I have close to 100 people behind that are running behind everything that I'm building. I have a board that I'm accountable to. I have a management team that will run this with. I have an administrator. But one thing we accepted is I knew I was getting some of the wealthiest people in Kampala. And we set our ambition so big that that the club we should, the company should at any point, especially 3 years later or 5 years later, be wealthier than any of us. And what that means is even the wealthiest person among you will be humbled on what the collective and the synergies you can do. So as you set up a goal to say, whatever, I don't know if you have already come up with a business plan, investment plan, risk analysis, and all those parameters that are extremely important. I don't know if you have already done that. But if you have not, whatever goal that you come up with, it should be bigger than Isaac, who might be the wealthiest among you. That's the only way Isaac will always be humble enough to say, let me trust the leadership, let me trust and I contribute my money, let me support this to ultimately be big enough that his 2%, his 5% shareholding is big enough that all of a sudden he cannot, what sometimes kills investment clubs is this. We start all companies, we start very good, idea is very good, products are very okay. 5 years down the road, I'm wealthier than the club. I almost want to beg them to give them money. Or one person can almost subscribe all the other 10 people. And then they start to feel like they should be the one to making the decisions or eating the company away. Eating the vision away. So, my humble opinion, whatever the goal is, it doesn't matter. Set it so big enough that it will humble even the wealthiest among you. I've told you personally, I started this, for those of you who follow me on Twitter, I posted that post calling for partners. I needed just 40 people. I posted it on December 20th. By January 5th, I had over 100 people and I said not over 60 people. Right now, we have a balance sheet that is over 2+ billion. And if all goes well, by mid next year, we should have shoot to 1 million. Now, if all goes well with the leadership that we're running and with the support with the board and everything, we should be able to hit $5 million in 5 years and start going for the target which we set, which is $50 to $100 million in 15 to 20 years. Now, that is a vision that all of us know individually we cannot beat that. So all of us are supportive of trying to build that company to that level. The other 3 or 4 companies that I'm talking about, we set them out in a way that they are for kids. And we said, 20 years from now, each child should belong to a company. Each child among us should belong to a company that should at a minimum have $2 to $5 million of assets and making income and having investment holdings in different entities that can employ our kids. And those were deliberate decisions we set up and we knew why. Otherwise, if you choose to do it individually, if you choose to do it in a laissez-faire manner, it will crash easily. That's why I started from the position that if someone doesn't buy into the ultimate vision and you feel this is not going to work for you, whatever the team is doing, you are better off stepping aside and let people run their journey. Maybe you might join them 5-10 years later, in case they have achieved it. 3, and this is where now my expertise comes in, because I know that's where it comes in a little bit more important. You guys are not starting a social club. Like Simon talked about, this is not just Bana Uganda to Singhana Mukulia. Mukuzika, Mbaga, we are always there. When it comes to business, rarely. But no, it's not rarely. It's picking up. It's just that the structures are not yet strong. Your team is starting an investment company. Something to collectively make money and invest. Before you even deploy a single coin, come up with an investment plan. If I'm to just do a little bit of a survey here and I say, how many of you work for some of the biggest, how many of you work for entities that are fully employed? Potentially, majority of you are. And I always ask myself, what the companies we work for, I'm based in Bermuda. The company I work for has existed for close to 100 plus years. Majority of the companies I admire to work for have been here for over 30, 50 years. What has set them up to succeed and be there for a long, long time? It might be the same experience for you guys have. You are in America. America has existed for 200 plus years. Chances are the company you're working for has been there for 30, 40 years. They do everything strategically with a plan. Yours is an investment. You should not deploy money until you come up with an investment plan. Whether it means hiring a specialist to come up with a plan for you, it's easy to collect money. Investing is not easy. Whether it's going to be hiring, or some of you are going to be the specialist investment decision makers, whether you're deploying the money in the stock market, whether you're deploying the money in hard money lending and flipping houses in the US, it makes a lot of money. Whether it means investing in deploying some of it in simpler things like the exchange traded funds, deploy it. When the plan also says how much should go to Kampala, let it go to Kampala, because there is so much money there also. It should follow what your plan is. That way, every single year, when you guys are sitting and on a boat cruise, please do it. You are asking for the questions to say, Kakande, you are the administrator, you are the leadership. Julius, you are the investment personnel. Every year, this year we collected this how much we gave you. The return we set up for you, a minimum is 10% net return in dollar value. Where are you? What's the level of accountability? If he's not delivering, take him off. Bring in someone else who can deliver. But set those goals. The products are there. Someone talked about that right now. I'm talking about goats. I'm not talking about goats because all of a sudden I've discovered gold. No. It's part of my strategy to deploy something in a riskier something. And I just got one single coupon of a bond. And I'm like, you know what? Even if I lose it, in January I'll be paid again. But I wanted to understand what makes that side of it be lucrative. So, but I sat down and I analyzed the issues and I came up with an investment plan that is mine. For me, I'm more for capital markets. I'm for treasury bonds. I'm for stocks. I'm based in Bermuda, but I'm investing in stocks in the US. You are in the US individually. You do not even have a single stock. But every single day, you are buying plots of land on phones. Kano kasava. Etakalali ba demu diama savu. But they have you on phone. Hamu kama wange dinetaka sava. Ligenda. No sendika yo sente. Diali ba demuji. You have 50 plus titles. Barely none of them is developed. Now all of a sudden you are worried. Why aren't they making the road? Did you think on why you were investing it? Now for individual, it's hard to control it. For the group, please make that investment plan. And that investment plan should be centered on 3 things. What is the risk appetite for the group? What is the ultimate goal? If like Simon said, if you are based in the US and majority of you are earning some decent good money, let the dream be like a 20 million or 50 million US dollar company in 20, 25 years. Get rich or die trying, it was a song. Or you get rich or die trying, not die trying, retire trying, but set it so ambitious enough that even every single year, everything that you end up investing in, whether it's the stock market, the analysis you must put in to make that, and the risk you must do it in. Whether it's in the simple businesses in the US that make money. Some of you are already running businesses that you are going to go borrow from hard money lenders, or you're borrowing from banks at 7-8%. Maybe it's time for you to sell off a particular equity into your company to this company. especially if your books of accounts are okay. Now the company is expanding its portfolio. Now all of a sudden the 20 of you, 25 of you are marketeers of this company. You are no longer just a buyer, you're a customer. When you choose to take money back home, whether it's in real estate or in my favorite treasury bonds, it should be dedicated on why you are doing it. That is following the investment plan. Fourth, I'm going to use 20 minutes, then I open it for the question, participant 15 minutes question. The fourth, and this is the most important one for the companies, and this is for the leadership. You must be extremely humble to be accountable to the other people. Whether you are the vision bearer, and of course you are the vision bearer, you should be extremely humble. That when people ask the questions, of course sometimes the questions are annoying. You're like, aren't you seeing what we are building here? Be willing to answer the questions. Because that's the only way everyone is going to continue building the trust into this. It's something that can be big. It's something that the leadership can kill if you are also a weak leader. Actually, just being a vision bearer doesn't make you the best leader. If somehow, somewhere, out of all of you, the 10 or the 20 of you, you realize one of you is the better, strong leader, you rather put that person into management position to make the decisions, because many institutions do not fail because of leadership and the culture that you set. If you set up a plan, I'll give you an example. I don't know. I do not believe any of you belongs to the other 4 entities. I have not mentioned the name. I don't think any of you belongs to one of those entities. But I'll use this example. When we are signing up what we called our agreement, our binding agreement, fully registered, we had a rule. If you spend 6 months, 2 quarters without contributing, we are buying you out. You are out. Many of you, chances are you belong to investment clubs, or you are close to people who belong to clubs. And when you talk to people, they're like, yeah, someone has spent a year, he's still... It's not like they have issues with money. They have issues with money. But we are so much friends that the friendship outshines the business side of things. After 6 months, you are voted out. After 6 months, 2 quarters, because for us we do quarters, every quarter. First quarter, we shall listen and we shall wait. Second quarter, when the other quarter is not, we realize that then you are becoming a weak link. You are out. So as a leadership, you should be willing to make the hardest decision, especially early on, such that people know, okay, this is Chisanja hakuna mchezo. This club is going to be run differently. This company is Kakande. You're not going to be the weak link for everyone, especially when the other 8 people are doing their part. Yes, when we are on the boat cruise, you are the best person to give the best dab. We shall invite you for that. Actually, you come at 5 p.m. when we are about to go for the dance. But for the business whatsoever, unfortunately, bye-bye. Do it. If you attend, the 2 people, Kakande and Alex, or Kakande and Julia, start playing around, chase them out. The other 8 will be like, oh, wait a minute, this means seriousness. And especially if you're doing it from the perspective that they are a weak link, from a few things you have agreed on. Come up with your shareholders, come up with your binding agreement, things that are so core to you, and the investment plan. But most importantly, like the organizations we work with, I come from a risk perspective. People think they know me so much for the investments, but I do so much also risk analysis. Sit down and come up with what the risks you might face that can easily challenge the core of your business, and be in a position to address them early on. Otherwise, you do not want 3 years down the road to look back and be like me, and you be like me and Julius on how we chased ourselves out of the group 12 years ago. You have to get those 3 things right. When you get those right, the leadership, the investment plan, and the buy-in of the people, and you know which people are the weak link, and let them go early on, the investment becomes easy. And if you set the right goal, If products, they become very easy. Somehow there, even if it means flipping houses, buying and redeveloping it and selling it, buying, redeveloping, selling it, make money. In the US, it makes money. If it means going to Kampala, setting up apartments, put them people, sell them as condominium, it will make money. If it means treasury bond, it will make money. If it means the stock, all of those will make money. But they will be in your investment plan and investment policy. So I'm going to pause here because they gave me 30 minutes. I have 10 minutes for a few questions that way I can answer them.